Hey, how's it going? Some people said that last week when I came up with a couple of videos I put together talking about how we are probably moving into a recession, that I was overreacting, and went through reasons why things would be different this time. And so I wanted to touch on that just briefly today in a quick video here. Give me just a second. I want to share this on another page while we do this. Great. So, my name is Russell McDonald. I am a real estate broker and mortgage broker in the San Francisco Bay Area. And I've been doing this since 1992. I've been around a lot. I've seen a lot in the various markets that we've been in. And so what I did is last week I talked about how the fact that we had the 10-year and 2-year bonds were inverted. And I went through the fact that every other time that's happened, going back to the 70s, it has meant that we would be in a recession within 1 to 2 years after that fact. Okay? There are some people that are saying, no, in this case it's different because it's really the Fed's fault. The Fed hasn't dropped rates as fast as they should, and so that's kept short-term rates higher than they should be because the Fed has had an unrealistic monetary policy. Okay, guys, maybe that's the case, but here's the thing. Every other time that the 2-year has popped above the 10-year in yield, even once, we've gone into a recession. So probably we're going to have a recession. It's not the end of the world. We have them about every 10 years anyways. But we've never had one without those yield curves getting inverted. And every time the yield curves have gotten inverted that way, we've had one. So those are numbers that I just wouldn't bet against. It's probably going to happen. So what you need to do is see what that means for you. You will be getting an opportunity to refinance your home loan at some point before this cycle is over. You might be able to do it right now. We have better interest rates than we've had just about any time since the presidential election in 2016 right now. Now, based on how far the bonds have gone down, mortgage rates really should be lower than they are right now. But one thing that happens is when we're in a declining market, mortgage rates are really sticky on the way down. And part of the reason for that is that lenders know that if they give up too much too fast, that the loans are just going to be refinanced again anyways. And so they're being cautious in case this dip down doesn't stay with this market. Now, realistically, rates are probably going to stay low for a while. Fannie Mae came out, I think it was today, and said that the Fed is probably going to be dropping 2 more times this year. And we're in the last half of the year, so those are going to be some pretty quick drops if it's going to be 2 more times this year. One thing that's really important, a lot of the national online or big box lenders will try to trick you into paying 2, 3, 4 points plus closing costs to buy the rate down. Do not bet against the market that way. In almost every case, paying the extra to buy down your rate ends up being a better deal for the bank than for you. If you want to learn more about that, you can reach out to me. I can discuss what my experience with that has been over the past 27 years doing this. And there have been very few windows where someone could have paid a whole bunch of points and come out ahead, as opposed to letting the bank pay some or all of your closing costs each time you refinance. Anyhow, listen, if you know anybody who needs this information, maybe someone who's thinking about paying 3 points plus closing costs to some online lender they found because the call center loan officer they're talking to has tried to convince them that will save them money over the next 30 years, tag them in this video or forward this video to them so they can at least see my point of view on this. And if there's anything else you'd like me to address in these videos, I am going to try to come to you several times a week with pertinent, valid information that will help you with your financing needs. Thanks for your time. Hope you have a great day.